While we've had some softer US data points, the sell off in the dollar hasn't coincided with those data points. It's rather manifested itself in odd times and odd places throughout the market. Ken Veksler, Accumen Management. Starting with China, we've seen some decent data released this week. Do you believe that this slow recovery can gain momentum and provide the PBOC with room to breathe and less stimulus going forward?
Look, ultimately, and this probably isn't the most popular theme out there, I don't, unlike the vast bulk of the market, believe that China is as deep in the doldrums as most would have us believe. Having said that, the data was good. It's just a function of whether you believe the numbers. Beyond that, I think rather than calling this a recovery, as slow as it may be, we're more likely to see a rounding bottom, as it were, as far as the data and the statistics coming out of China. Subsequently, what that means is that the PBOC will have, I suppose, some element of breathing room, but unlike all the other Western and developed economies, the difference with China is that they have both sets of tools at their disposal, meaning not just monetary policy but also fiscal stimulus, and they will employ each as they see fit in a manner and time that is fitting. So overall, I think it's probably too early to call it a recovery as such, but certainly I think we're starting to see a level of bottoming, if you will, of deteriorating data, and from there a period of consolidation should begin.
The BOE held rates steady at 0.5% yesterday, as many analysts had expected. Now, we had some better than expected UK data out on Tuesday, including inflation. Do you think that the BOE will make any sudden movements before the referendum?
No, I think realistically the BOE is going to be loath to do anything prior to the referendum, and as it currently sits, as far as the market's concerned, despite the fact that I don't believe it myself, the market is actually pricing the next move to be more likely a cut in rates rather than an actual increase. So, as I said, my base case is that Bank of England does nothing at all, let alone cuts. But certainly the market is anticipating, a favoured move towards a cut rather than a hike. And as far as the actual data is concerned, it was okay, but I do believe that it was a slight blip in the sense that it factored into the equation an early Easter and some price movements in oil, which may have somewhat, muddied the waters as far as the overall inflation picture is concerned. More to the point, inflation still remains fairly significantly subdued and not quite the impetus that the Bank of England would be looking for as far as any sort of monetary policy action.
US retail sales fell minus 0.3% month on month in March, when analysts had actually expected an increase. The labour market is quite strong and wages are beginning to increase. So do you think the drop in March was just a blip?
Yeah, I think if you dig down deep enough, I think over the medium term, if you look at the data in perfect respect, I suppose, to the month-on-month prints, I suppose there is an element of a blip. Overall, the economic picture for the US remains more of an inflation issue than an employment issue, because whether you define natural unemployment at 4.8 or thereabouts, the employment situation looks to be relatively in hand. It's, however, the inflation scenario that is potentially providing some headaches for the US as it is for everyone else. So all in all, I'd consider the last print to be relatively negligible, and the overall on-trend data series, both in the employment and the inflation space, to be on track as it has prior to.
And finishing up, what other events then or data releases impacted the financial markets this week?
As far as specific data releases, not really. It's been an odd week with regard to the broader dollar index and various inputs based on headlines about the upcoming meeting this weekend in Doha on the oil summit and whatnot. Realistically, at play is a situation where the market is tentatively starting to disbelieve the strong dollar story. And what's been interesting actually is that while we've had some softer US data points, the sell-off in the dollar hasn't coincided with those data points. It's rather manifested itself in odd times and odd places throughout the market. So that in itself sort of creates a bit of uncertainty in my mind with regard where the broader market is as far as its positioning on the dollar. But overall, it's been a mixed week and not necessarily so much data driven as predominantly price action. So all in all, we're happy to see the end of this week and look forward to what sort of data points and where we go next.
Ken, thank you very much for sharing your insights with us. It's always a pleasure to hear from you. Well, that is all for now. Have a nice weekend.